Alright, good morning, warriors. We were trying to complete the chapter number 1, right? Yes, okay. So, in yesterday's class, we were discussing about the charging section, where we started with what is the charging section saying. It said that income tax shall be charged on the total income which is earned by a person, which is during the previous year, at the rates in force and shall be accessible in the assessment year. Yes, yes. In this, we learned two words yesterday. One was called as total income, the other one is called as person definition, where we said person meaning individual, HUF, company, firm, which is including LLP, AOP, BOI, local authority, and artificial juridical person. Yes, these are all the persons which we learnt yesterday. Can we go forward? Yeah, okay. Coming back to the charging section once again, it says income tax shall be charged on the total income which is earned by a person during the previous year at the rates in force and shall be accessible in the assessment year. Now that we have learnt what the meaning of total income and person is, the next word in this charging section is previous year. The next word is what? Previous year. Coming back to your enter, can you help me with what do you mean by previous year? Yes, we are looking at this word called as previous year, where basically income tax is coming and saying that, sir, please understand, income tax means income means revenue minus allowable expenses. Now think about it. Is it possible that today when you have revenue, today itself you will have expenses? No. It is so possible that the day when you have revenue, expenses may be in the future, or first day you will incur expenses, then you will have revenue, which means at a certain day you cannot come and decide what is your income. At a certain day you cannot decide what is your income, and therefore you have to take a multiple period. You have to take a multiplicity of period, and therefore income tax came and said the best period for you to take is 12 months. The best period for you to take is 12 months, and therefore income tax came and said we will recognize the concept of financial year. We will recognize the concept of financial year, where income tax in simple words is coming and saying you do one thing, take a cutoff of 12 months of a financial year, and in that financial year whatever you earn as an income, on that I want tax, and therefore they said, boss, we will use this word called as previous year. In simple words, previous year is a period of 12 months. Previous year is a period of 12 months in financial year terms. Hey, can someone tell me what is financial year, Ritanya? What is financial year?
Sir, any period ending on beginning in the month of April.
Very good. The period between April to March. So they came and said, when you earn any kind of income between April to March, that will be called as a previous year. On this, I want you to pay tax in assessment year, which comes in the next word called as assessment year. Which brings in your next word called as assessment year. Now, in this assessment year, they are simply coming and saying that, sir, you earn an income in 1 year, next year I will ask you to pay tax. The reason is because I want to know how much you will have in income in that period. On the period, what income you earn, you compute your taxes in the assessment year and you pay your taxes in assessment year, which is why we use the word as assessment year, meaning I am assessing your income of the last year. Rahul, for how much period is assessment year? Same 12 months. And same financial years. Now, if you notice, what I'm coming and telling is, you earn income in 1 year, you pay tax in next year. Which means assessment year will come later or previous year will come later? Assessment year will come later. So, which means you earn an income in previous year, you will pay tax on that in assessment year. Both are financial year terms. Rahul, for your exam, it is previous year 23-24. What is it? It is previous year 23-24, which means your assessment year will automatically become 24-25. Keep that in mind. Yes. So for your exams, your previous year is 23-24 with an assessment year of 24-25. Coming back to the discussion once again, you're looking at two words. One word is called as previous year, one word is called as assessment year. Both are financial years where they have a period of 12 months. Previous year is the year in which you earn your income. Previous year is the year in which you earn your income. Assessment year is the year in which you pay your taxes. Assessment year is the year in which you pay your taxes. Yes or no? Yes or no? Yes or no? Yes. This is what the concept is. This is what the concept is. Any doubts till now? Any doubts till now? No. Okay. Now, I have a question for you. Let's say you are working. You are working. Okay. Now, you have started your employment on 5th April 2023. You have started your employment on 5th April 2023. You will start getting money from 5th April. You will start getting money from 5th April. You worked for the whole year. You worked for the whole year, which means your year ended on 31st March 2024. Yes or no? Yes. In this scenario, tell me what is your previous year, what is your assessment year. My previous year will be 2023-24 and my assessment year will be 2024-25. Yes or no? Yes. Now this is what you know. This is what you know as your previous year and assessment year. In date format, what is the date? In date format, it is from 5th April 23. Why Rahul 5th April and not 1st April? Because I started earning income only from 5th April. I started earning income only from 5th April, which means I know that I have to pay tax only from 5th April. Yes or no? So it will be 5th April 2023 to 31st March 2024. What will be my assessment year, Rahul? What will be my assessment year? My assessment year will start from 1st April 24 to 31st March 25. Yes or no? Yes or no? Think about it. No. If you notice what is happening, previous year there is 4 days gap. Previous year there is 4 days gap. We are starting from 5th April. We are starting from 5th April. And assessment year Puerto Rico, we are always doing full 1st April to 31st March. Full 1st April to 31st March. In simple words, can I come and say that previous year may or may not be 12 months? Can I come and say previous year may or may not be 12 months? Yes. If you notice in this case, it is not 12 months. It is less than 12 months. It is 4 days less. It is 4 days less. Anani assessment year pona. Will assessment year always be for 12 months? Yes. Assessment year will always be for 12 months. Yes. In simple words, I can come and say previous year may or may not be for 12 months, but assessment year will mandatory be for 12 months. Assessment year will mandatory be for 12 months. This is what the logic is. Yes or no? Yes or no? Yes. I'll give you some scenarios. You tell me what is your previous year and what is your assessment year. Okay. I have started doing business from 1st January 2018. I've started doing business from 1st January 2018. Tell me what is my previous year 23-24 order dates. 23-24 order dates and adako assessment year order dates. Assessment year order dates. Yes. Scenario number 1. What is it? I have started business on 1st January 2018. What is my previous year, Rahul? Date format. First January. How is it 1st January, ma? I'm asking for the previous year 23-24. It will be 1st April 2023 to 31st March 24. Rahul, can I come and say that my previous year is 1st January 2018? No. Please understand, I told you it is maximum of 12 months. It is maximum of 12 months. If you say your previous year is 1st January 2018, then you will say that boss, for the last 3 years, 5 years, I have not paid tax only. I have not paid tax only. Have you paid taxes? Yes. Which means for you, previous year 23-24, the date format is April to March. Assessment year is 1st April 24, 31st March 25. Yes or no? Yes or no? Yes. Scenario number 2. Scenario number 2. I have started doing business from 14th February 2024. What is my previous year 23-24 order dates? Huh? When did you start doing business? What is my dates? Retanya? 14 February 24 to
31/3/20.
31 3 24. Very good. Assessment year.
24/24. 1/4/24.
1 4 24 to
31/3.
31 3 25. Correct? Yes. Scenario number 3. I started doing business from 1st July 24. I started doing business from 1st July 24. My previous year 23-24 la dates is what is my previous year dates?
The previous year itself is 24/20.
Very good. Previous year itself is not there. Previous year itself is not there because you started doing business from next year. So therefore, previous year itself is not there. Assessment year also will be not there. Assessment year also will be not there. Yes or no? Yes. Question number D. Question number D. I started doing business from 31st March 24. I started doing business from 31st March 24. In previous year 23-24, my dates are
31/3/24 to 31/3.
31
3/24 to 31.
to 31 3
3/24.
24. Okay, question to you. Can you have previous year only for one day? You said 31 3 24 to 31 3 24, no? Can you have previous year for only one day?
I think previous year can be any less than.
Previous year can also be for a period of one day. I told you previous year is for less than or equal to 12 months. Less than or equal to 12 months, which means it can be as low as one day also. It can be as low as one day also. Think about it. Assuming you say it is not one day, Rahul. Assuming it is not one day, what will you do? You will come and say, Rahul, up one day should be ignored. One day should be ignored. If you ignore this one day, assuming you're going on the road, you found a lottery ticket. You got this lottery ticket on 31st March. You saw the lottery ticket is showing 5 crore rupees. You got money in your hand, 5 crores. What date? 31st March. If you come and say, Rahul, I will not recognize 31st March, that 5 crores money which you got, taxable, tax free. It'll become tax free. If you don't recognize the 31st March. And therefore, one day is also previous years. There is no doubt about it. Assessment year will be 1st April 24 to 31st March 25. 1st April 24 to 31st March 25. If you notice in all the examples, the understanding which has come out very clearly is previous year may or may not be for 12 months, but assessment year will always be for 12 months. The only scenario where previous year may or may not be for 12 months is the scenario where the business is just now getting incorporated. Or the income is just coming into existence. In simple words, assuming the legal entity was not even formed. Legal entity got formed on 5th April only. In that case, previous year will start from 5th April. Yes or no? Nee company ipoda incorporate pannirukka. Unakku previous year 5th April dana aarambikkum. Yes. So two scenarios where previous year will be less than 12 months. Scenario number 1, business is just now started. Entity is just now formed. Or you are just now born, whatever you call it. In all those scenarios, you will have a smaller previous year, but that will not change your assessment year. Yes, sir. See, assessment year means a period of 12 months, which is commencing on 1st April of every assessment year. Year in which the income is earned is the previous year, and the year in which it is taxable is the immediately following year, which is called as your assessment year. For example, for whatever income you earn in 23-24, you will pay tax in assessment year 24-25. What is previous year, Rahul? Previous year means the financial year which is preceding the assessment year. This is the year in which the activities which are to be assessed are carried out. Yes. Under Income Tax Act, previous year and assessment year are always recognized on April to March terms. If an entity is following a different logic, someone is following Jan to December, July to June, whatever it is, it doesn't matter. Income tax will say you have to follow April to March. In that case, what to do, Rahul? The person will have to change his books. Or maintain two books. One book for his accounting purpose, one book for tax purpose. But he will have to maintain a books from April to March for income tax purpose. Second, they are coming and saying previous year may or may not be for a period of 12 months. Example, in case there is a new business or a new profession. Previous year shall be from the date of setting up. However, assessment year will always be for 12 months. Clear? Yes. With this, we have understood from our thing what is called as previous year and what is called as assessment year. Can we go forward? Yes. Next, what word is pending? Check, no? Income tax shall be charged on total income earned by a person during previous year and assessment year. Pending words are rates in force. Rahul, what is rates in force? Rates in force, they are coming and saying whatever is the income tax rate. I already told you income tax rates are given in. Where is income tax rates normally given, ma? Income tax rates are normally given in your Finance Act. Income tax rates are normally given in your Finance Act, where it will be in part 3 of the schedule. Yes or no? Yes. So income tax is coming and saying rates in force means that rates which are given in Finance Act. But yes, you also know from your inter syllabus there are some rates which are directly given in income tax itself, like lottery income and all is directly given in income tax itself. Next chapter. So what's the rates in force? Next chapter we will discuss. Okay. Two words which you need to know apart from this. One word is called as MMR. The other word is called as average tax rate. What is one word? MMR. The other word is average tax rate. MMR in full form is called as maximum marginal rate. MMR in full form is called as maximum marginal rate. Rahul, what do you mean by maximum marginal rate? Income tax comes and says the highest income tax rate which is there in India. For a resident person. What person? Resident person. If you think about it, the highest income tax rate for a resident person which I remember is basic tax of 30%. Yes or no? Plus, if you are a very rich person, you have a surcharge of 37%. Plus, we also have to pay something called as cess of 4%. Our number is Rahul. 30 plus 37 plus 4 number.
42.74.
Very good. It is 42.744. Rahul, how did you get this 42.744? 37% is on 30%. 4% is on both. So on calculator it will become 30 plus 37%. Adhika mele plus 4%. It will become 42.744. In income tax, the highest tax rate which can be charged is 42.744. Keep this in mind. When we do some chapters, these chapters will directly keep coming. These things will directly keep coming. Going forward, they will always come and say, you have something called as MMR to pay. When we use the word MMR going forward, the rate is 42.744. Yes, sir. Rahul, what is average tax rate? Simple. Income tax is coming and saying, if you are liable to pay a tax, on what income are you paying is called as average tax rate. In simple words, let's say for example, your income is 10 lakhs. What is your income? 10 lakhs. Assuming you are doing normal regime. Normal regime meaning that slab of 2.5 lakhs and everything. What will happen? It will be 0 to 2.5. 0. 2.5 to 5. How much? 12,000. 500. Then 5 lakhs to 10 lakhs will become 1 lakh. How, Rahul? Why, Rahul? Next chapter. Yes, total will become 1 lakh 12,500. On this you will add cess at the rate of 4%. Get me the number. Take out a calculators. Get me the number. One lakh 12,500 into 4% number. Huh? 4,500. Therefore, total taxes 1 lakh 17,000. Yes. Yes. Now, for earning an income of 10 lakhs, you have to pay a tax of 1 lakh 17,000. What will be your average tax? Your average tax will be 1 lakh 17,000 divided by 10 lakhs into 100. 1.17%. Sorry, 11.7%. 11.7%. This is called as your average tax. This is called as your average tax. Where will you see this average tax and all, Rahul? Generally in TDS chapter. Generally in TDS chapter, they will come and say whatever is your tax, adukku mela average varno. Since you are in final level, you will also find this average tax in AOP chapter. AOP chapter, DTAA chapters and all those things. There also you'll find this thing. When we come there, that time we'll discuss once again. Okay. So 2 words for you. One word is called as MMR. The other word is called as average tax. The other word is called as average tax. Clear till here? Clear till here? Yes. This is what is your rates in force. This is what's your rates in force. Can we go forward? Yes. With this we are done. What is rates in force? Leaving us with the last word called as assessable. Leaving us with the last word called as assessable. If you read the English properly, it says income tax shall be charged on the total income which is earned by a person in the previous year and shall be assessable in the assessment year at the rates in force. At the rates in force. In simple words, they are coming and saying generally if you earn an income in 23-24, you have to pay tax in 24-25. You have to pay tax in 24-25 with certain exceptions. With certain exceptions. Now what has happened is they are coming and saying, Rahul, I know you want me to pay tax for a previous year 23-24 and 24-25. I know generally you want me to pay tax of 23-24 in 24-25. But think about it, no? I earned income in 23-24. You're asking me to pay tax in 24-25. Rahul, what if I'm not even there in 24-25? What if I'm not even there in 24-25? There could be a possibility, no? Because there is a time gap. There is a time gap. Now, income earn pandra, I am not even there here. I'm not even there here. In that case, there can be a possibility that income tax may lose money. Income tax may lose money. Therefore, income tax is coming and saying, Rahul, yes, I do understand 23-24 order tax you want in 24-25, but in certain cases, I cannot wait. In certain cases, I cannot wait because I feel like you may cheat me. I feel like you may cheat me. In which case, they will come and say, Rahul, 23-24 order tax, I want in 23-24 itself. What? I want a 23-24 order tax in 23-24 itself, which means your previous year and assessment year has become same. Your previous year and assessment year has become same. Yes. What am I telling? If I am earning an income in 23-24, I have to pay tax in 23-24. If I am earning an income in 23-24, I have to pay tax in 23-24. Think about what scenarios can happen. Think about what scenarios can happen. Why would I like to pay tax of 23-24 in 23-24 itself? Why would government like to collect money from you faster? Why would government like to collect faster money from you? Think about it. Okay, I am Rahul. 23-24, I earned an income of, let's say, 1 crore. I earned an income of 1 crore. Do I have to pay tax? Not pay tax. I have to pay tax. When do I have to pay tax? 24-25. I have to pay tax in assessment year 24-25. But what happened is on 30th March itself, I booked a flight. And I left India. on 30th March itself, I booked a flight and I left India. Am I going to come back? Not come back. I'm going to not come back. I'm not going to come back. If I'm not going to come back, assessment year, will I pay tax? Not pay tax. I will not pay tax. Will department lose money? Not lose money. In this case, will department like me to leave on 30th March? No. What will department come and say? Department will come and say, if you are going to leave India and you're not going to come back, you have to pay me tax of that 23, 24. You do one thing, you pay it right away. You pay it right away. Right away is 30th March. Right away is 30th March, which means same previous year or different previous year? Same previous year. Yes, scenario number 1. What is happening? I am a person who's leaving India. I'm a person who's leaving India, not going to come back. Not going to come back. This is called as individual leaving India with no intention of coming back. Individual leaving India with no intention of coming back. Yes or no? Yes or no? Yes. Scenario number 2, Rahul. Rahul is running a CA firm. Rahul is running a CA firm. CA firm earned an income of 1 crore. CA firm earned an income of 1 crore. What Rahul did is on 30th March itself, Rahul shut down the operations. On what date? 30th March, Rahul shut down the firm. Yes, yes. Now, Rahul has earned an income in the CA firm. How much? 1 crore. This tax will be paid in assessment year. In assessment year, assessing officer is coming to you and coming and saying, dear Rahul, your firm has earned 1 crore, pay tax. You are saying, dear sir, I do understand firm has earned income. Firm is liable to pay tax, but the firm has to pay tax. Is the firm alive? No. If the firm is not alive, who will pay tax? Why should I pay tax, sir? I am not paying tax because I am a separate legal entity. Firm is a separate legal entity. If you want to collect taxes, you go collect from firm. You collect from firm. Assessing officer comes and says, sir, firm is not alive. Firm is not alive. He is like, I am not bothered. You can collect only from firm. You cannot collect from me. Assessing officer will lose money, not lose money. He will lose money. In this case, they will allow you to shut down the firm, not shut down the firm. They will not allow you to shut down the firm. What will the assessing officer come and say? Before you shut down your firm, you first pay me tax, then you shut down the firm. Before you shut down the firm, you pay me tax, or then only you shut down the firm, which means a business or profession discontinued in the previous year. Business or profession discontinued in the previous year. Yes or no? Yes or no? Which means if I am discontinuing my business or profession in the previous year, assessing officer will come and say, first you pay my tax, then you discontinue. First you pay my tax, then you discontinue. Unless you pay my tax, it will still show as liability. It will still show as liability. Yes or no? Yes or no? Third, I am forming an AOPBY. What am I forming? AOPBY. Yesterday's discussion, if you remember, I told you AOPBY generally will be formed by a force of law. Will be formed by a force of law. My example was a case where there was a father, 4 sons. He has died, so 4 sons took the land. 4 sons took the land. The 4 sons is having the land, they are planning to sell. They are planning to sell. Now, 4 sons together decided to sell off the land and they sold off the land. The moment they sold off the land, will the AOP still be there or will the AOP get down? The AOP will get over. Yes or no? Yes, today AOP is there. AOP sold the land, got 1 crore rupees. AOP sold the land and got 1 crore rupees. Land sold, 1 crore rupees also came. This 1 crore rupees got distributed to all the 4 people. Now AOP is still there, not there? Not there. Assessing officer is going and asking one of the brothers that please give me tax. That brother is saying, sir, I will not give tax because that person earned income. So assessing officer goes to that person. That person says this person says that person, that person says this person. Finally, everyone come and say, collect from AOP. Collect from AOP. AOP is not there. Will assessing officer be able to collect taxes? No. Therefore, AOPBY. What is this? AOPBY. Dissolved. In the previous year. Yes, recapping once again, people, we are looking at those scenarios where the previous year and the assessment year will be the same. The previous year and the assessment year will be the same. The reason they are going to become the same is because people are going to cheat government and not pay tax. People are going to cheat government and not pay tax. Scenario number 1, I am leaving India with no intention of coming back, which means I will not pay tax. Scenario number 2, my business or profession is discontinued in the current year, which means I will not pay tax. Scenario number 3, my AOP BOI is dissolved in the current year, which means I will not pay tax. Yes. Can we go forward? Scenario number 4. Scenario number 4. Rahul is there. Okay. Now Rahul is already poor. Rahul is already poor, but in the current year has earned an income of 1 crore. Current year has earned an income of 1 crore. Unfortunately, what happened is this 1 crore rupees which he earned, what he did is he spent off the whole money. He went gambling and everything. Money sold off fully. Yes, he has zero money in his hand. So in the 1 crore order income, he has zero income. Right now, Rahul, will he be liable to pay tax still? Yes, because you spent your responsibility. Income tax still wants their tax. So what happened is Rahul had 1 crore income, but Rahul spent off the whole 1 crore income. He knows assessing officer is going to come tomorrow and ask for tax. That time Rahul will come and say, I don't have money. What will assessing officer come and say? Okay, if you don't have money, I will collect it from your assets. Yes or no? Whatever old assets and all you have, I will collect it from your assets. Rahul basically had a building in his name. What will assessing officer generally come and do? He will come and say, Rahul, you have a building in your name. I will sell off your building and I will collect my tax. Yes or no? I will sell off the building and collect the taxes. Now Rahul wants to sell his building, not sell his building. Does Rahul want to give his building to assessing officer for tax? No. So what Rahul did is Rahul silently sold off the building also. The moment Rahul sold off the building, he got some money, let's say 2 crores. This 2 crores also Rahul spent off. Now think about it. Assessing officer is coming to you and saying 1 crore Kamala, I want tax. You say, sir, money illa. He says, okay, I will take your building. I'm saying, sir, building is also not there. Can assessing officer now collect money from you? No, you don't even have money to pay. Now think about it. You earning 1 crore and you spending of 1 crore is a different story. But because you did not want to pay tax on that 1 crore, you cheated the government by not keeping the building also. Which means you sold the building with an intention to cheat government. This is called as sale, transfer, dispose or charge of an asset. What is happening? I am selling, transferring, disposing or charging of my asset with an intention to do what? Evade tax. Hey, in this scenario, what will happen? Simple. Assessing officer will come to you and come and say, dear Rahul, before you decide to sell all your assets, I will come and look at what demand you have. If you have a demand, I will come and say you cannot sell the asset itself. Unless and until you give my money first. So what will happen? Assessing officer will have a first priority. As we go forward, we have a chapter called miscellaneous. And the miscellaneous chapter, what will happen is income tax will come and say, if you have an income tax demand and you end up selling your asset, I will assume that the sale was void. Which means asset is still yours. Assessing officer will come and say, I still want tax from you. You will have to go to the buyer and come and say, sir, transfer did not happen itself. Give me back my building. I have to sell it and give money to assessing officer. Yes. So what is going to happen? Assessing officer will come and say, your sale itself is not valid. I will collect the tax from you. So you go to that other person and get me the building back. He will first collect the taxes, then only he will give the sale. In this scenario, who's more at loss? Am the seller more at loss or the buyer more at loss? The buyer will be more at loss because seller ka kaas vandichu avan spend pannitaru. Rahul already got the 2 crores. He spent it off also. Now, if the sale is not valid, what will happen? Buyer does not have the building. Buyer does not have the building. What will the buyer come and do? Buyer will come and say, sir, I got the building for 2 crores. Today you are asking me to pay tax on that building, which means technically seller owed a tax, now buyer is paying. Seller owed a tax, now buyer is paying, because obviously buyer will go and ask the seller to give money. Seller will come and say, I don't have money. Adana, I told him. If the seller had money, he would have given it to assessing officer itself. He doesn't have money. So what will happen? Buyer will end up giving off the building also. Buyer will end up losing this 2 crores also. Very risky scenarios. Very risky scenarios. You have to be very careful whenever you get a big asset from another person. Whenever you get a big asset from another person, it is generally your moral obligation to check with the other person if he has any income tax demand. If he has any income tax demand, or what is he selling? What is he selling? If he decides to sell all his assets, hey, understand, no, if he's selling 1 or 2 assets, then it's fine, because he still has other assets to recover from assessing officer. Anna, if you notice that he's selling all your assets, in that case, what will you know? If he's selling all his assets, it means pakka he's going to cheat the government. In that case, you will take a stop. You will take a stop and you'll come and say, no, sir, I don't want your assets, because now like assessing officer will come and ask me. So therefore, you first pay off the tax, then you sell the asset. You first pay off the tax and then you say the asset. You have to be extremely careful in a buyer scenario. You have to be extremely careful in a buying scenario. For those who remember your CA inter, we had this Companies Act. We had this Companies Act where we had this topic called as lifting of corporate wheel. What wheel? Lifting of corporate wheel. In that scenario also, you would have learned something like this. Sale, charge, dispose or transfer of any kind of assets with an intention to evade taxes. They will lift the corporate wheel and they'll come and say the company and the owner is the same person. The company and the owner is the same person. Same logic. Same logic. I'm coming and saying, if you decide to sell, transfer, dispose or charge off your asset with an intention to avoid taxes. With an intention to avoid taxes. Clear till here? Clear till here? Last scenario. Last scenario. You are a non-resident shipping company. What are you? You are a non-resident shipping company. Think about it. You are a non-resident shipping company who is going to come to India. Who is going to come to India? Why are you coming to India? Why are you coming to India? You are coming to India because you have decided that you wanted to take some passengers from India and take it back to your country. Yes. For example, you are from Singapore. You are from Singapore. What are you doing? You are arranging transportation from Singapore to India. So you came to India and you collected passengers from India to take them to Singapore. Now passengers are riding free of cost, or they are giving money to you? They are giving money to you. Who is giving money? Indian passengers. Indian passengers are giving money to a non-resident shipping company. On that money, is income taxable, not taxable? Taxable. Income tax will come and say shipping company has to pay tax. Shipping company has to pay tax. Now this non-resident shipping company is coming on 20th February 2023. 2024. 20th February 2024. Think about it. Shipping company today is leaving on 20th February. Will it come back to India next day itself? Possible, not possible? No. It's a shipping company. For one ship to reach from one location to another location, it will take months. Yes or no? So what happened is, it left from India on 20th February. It went to Singapore on 31st March something. After that, for the next full year, he did not come to India. Next full year did not come to India. Now, assessing officer is sitting in India or in foreign? He is sitting in India. He wants tax in India or in Singapore? India. But the shipping company is in India or Singapore? Singapore. Will the shipping company come to India and pay tax? No. Therefore, they are coming and saying, dear shipping company, I know I don't trust you. I know I don't trust you because you are not in India. You are not in India. You may not come back to India and pay tax also. Do one thing, before you leave itself, you pay tax. Before you leave itself, you pay tax. So what is happening? I am coming and saying, non-resident shipping company. Non-resident shipping company leaving India. Non-resident shipping company leaving India, where I am coming and saying, if you are a non-resident shipping company who's planning to leave India, I'm sorry, before you leave India itself, you pay me my tax, then you leave. Before you leave India itself, you pay me my tax and then you leave. Otherwise, what will happen? I will not be able to collect you back. I will not be able to collect you back. Rahul, why am I doing this only for shipping? Why am I not doing for flight and everything? Why am I not doing it for flight and everything? Because understand, flights and all are generally regulated. Yes or no? The airline industry and all is regulated. You have acts and all for it. Tomorrow, if the airline company is not paying, you can raise a complaint to the government. On a ship and all, you will not be able to raise a complaint because that guy, where he is in the market, no one knows. Yes or no? If tomorrow Singapore you go and call, you find out that this guy is not in Singapore also, because அவன் பாட்டுக்கு சீஸ்ல இருக்காரு. He is going and riding the seas. Will you be able to find him? No. Will Singapore be able to find him? No. In that case, they came and said, boss, risk is very high. Risk is very high. Flight and all, at least risk is low because the flight will keep coming back. 2 days later, it will come back. 3 days later, it will come back. Someday, it will come. And a shipping company may or may not come back. Shipping company may or may not come back. Suddenly, this person decides, I want to do round the world in 80 days. I want to do round the world in 80 days. அவன் 80 days சொல்றாரு, ஆனா he does not come for 10 years. He does not come for 10 years. You are at loss, yes or no? Yes or no? Therefore, they came and said, shipping company is a very risky area. Shipping company is the very risky area. I want the shipping company to pay his taxes right away before he leaves. Before he leaves. Clear? Not clear? Clear? What are the 5 scenarios, Mama? Read it with me. First scenario, individual leaving India with no intention of coming back. Second scenario, business or profession discontinued in the previous year. Third scenario, AOP BOI dissolved in the previous year. Fourth scenario, sale, transfer, dispose or charge of the asset with an intention to avoid taxes. Fifth scenario, non-resident shipping company leaving India. Non-resident shipping company leaving India. Yes, sir. Yes, sir. Yes. Now, too much theory to remember, so let's prepare a story. Too much theory to remember, so let's prepare a story. I will tell you a story, you follow the story, answer will come. You follow the story, answer will come. We're going to talk about a very famous and an honest person of India, Mr. VM. Yaru? Mr. VM. VM is Mr. Vijay Mallya. VM is Mr. Vijay Mallya, the most honest person in India. Yes, there is a person called as Mr. Vijay Mallya. There is a person called as Mr. Vijay Mallya. He owns, what does he own, ma? What is the name? KF. Kingfisher. He owns a Kingfisher, yes. Now, Mr. Vijay Mallya is owning a Kingfisher. Mr. Vijay Mallya is owning Kingfisher. He is earning big money, small money. Big money. He's earning big money. If you have big money, you will try to spend more, spend less. Spend more. So what happened is Mr. Vijay Mallya was doing Kingfisher, running beautiful business, extreme level of money. One day decided that I want to spend my money. I want to spend my money. So he found that in India that day, there was something called as F1 racing going on. What going on? F1 racing. Do you know what is F1 racing? Do you know what is F1 racing? F1 racing is that car racing. You'll see that cars and all, no, in sports channel and all, you'll see that or ramp போட்டிருப்பாங்க, அந்த rampல cars சுத்தினே இருக்கும். Yes. So what happened is there was an F1 racing going on. Mr. Vijay Mallya decided to sponsor the F1. Mr. Vijay Mallya decided to sponsor the F1. He bought one team, RCB Mari. He bought one team called as RCB Mari. F1 racing lo or team வாங்கினாரு. Yes. But F1 racing is generally very costly. So he did not have enough money himself. So he went to his friend. Mr. NM. NM is Mr. Nirav Modi. NM is Mr. Nirav Modi. Who is Nirav Modi? Nirav Modi is also one of the very honest persons in India. Okay, he has cheated India with about 300 crores something, 300,000 crores something. Okay, so some other same honest persons. Yes. So Mr. Vijay Mallya went to Nirav Modi, came and said, dear Nirav Modi, I want to buy one F1 team. I don't have enough money. Let's do one thing. We both will buy it together. So Mr. Vijay Mallya and Mr. Nirav Modi went and bought one F1 racing. Now tell me, Vijay Mallya and Nirav Modi brothers are or friends are? Friends. If they are friends, they both are going to buy one F1 racing together. What will this organization be called? Will it be called individual, company, firm, LLP, AOP, BOI, AJP, local authority? Summa, one day both of them come together, decide they will buy one F1 racing. What will this be called as? Is it a partnership? No. Is it a company? No. Is it an individual? No. Is it a firm? No. It is a AOP or BOI. Yes or no? Yes. Recapping the story, I am Mr. Vijay Mallya, having Kingfisher, doing great business, decided to buy one F1 racing, do not have enough money in hand, so I went to Mr. Nirav Modi and came and said, let's together buy one F1 racing by creating an AOP BOI. That year F1 racing happened. That day F1 racing happened. Vijay Mallya spent lavish money. Yes, put all gamble. He came and said, my team will only win, sollte 500 crores he gambled off. 500 crores he gambled off. That year team lost. Vijay Mallya has to give money, not give money. Vijay Mallya has to give back money. He gambled for 500 crores, so which means he has to give that money. Does he have that money? No. So he does not have the money. What he did is he went to the F1 racing team and came and said, dear team, I cannot handle you anymore. Because of you, I lost 500 crores. Please shut down. Yes or no? Yes. So what happened? Mr. Vijay Mallya went to F1 racing, came and said, because of you, I lost 500 crores. I want you to shut down. Now, just because F1 racing shut down, 500 crores to be given, not given. Still to be given. Yes. So what happened is people are coming to Mr. Vijay Mallya's house. They're knocking the door and they're coming and saying, sir, my 500 crores. My 500 crores. My 500 crores. Vijay Mallya is saying, sir, I don't have money. But they know if Vijay Mallya does not pay the money, they will tomorrow come and ask for Kingfisher. So Vijay Mallya decided he will leave India. So Vijay Mallya decided, I will abscond from India. I will abscond from India and leave India. Now, if you are planning to abscond from India, do you need money or you can freely go? You need money. Does he have money? He does not have money because he spent everything in the gamble. The only one thing which he has is Kingfisher. So he decided to sell Kingfisher. If you want to sell Kingfisher, you will have to sell the assets or sell the Kingfisher. You have to sell the assets. So what happened is Mr. Vijay Mallya went to Kingfisher. Took all the assets and sold off. Now, does he have money? Not have money. He has money. Is he going to repay back or is he going to leave India? He's going to leave India. So he has money in his hand. He's going to leave India. But understand, Kingfisher, all assets sold off. Does Kingfisher has any value right now? No, which means he can also decide to close Kingfisher. Kingfisher will be in problem. So what he decided to also close Kingfisher. Now what has happened? Vijay Mallya started F1 racing, gambled, lost money, decided to leave India, wanted money, so sold Kingfisher assets, then closed Kingfisher. Now he has money in his hand, planning to leave India. How will you leave India, ma? Will you leave India in bike? Or car? No, not possible. You leave India in flight. Now, he was trying to leave India in flight. He is the owner of Kingfisher. When he tried to leave in flight, will he leave in Kingfisher flight or some other flight? But he sold off Kingfisher, which means does Kingfisher flight there? Not there, which means he will have to choose for second flight. He went to his friend Indigo flight came and said, no sir, you have your own flight, you run in your flight, I will not give you seat. So he tried Indigo, Air India, Lufthansa, everything he tried. No airlines is allowing him. Can he take flight now? No. So car also not permitted, bike also not permitted, flight also not permitted. Only one option left is ship. So what happened is he went to Indian ships. And he came and said, dear Indian ships, I want to leave India. Now the problem is Indian ships were all friends of the gamblers. They came and said, sir, you have money left. First pay the money, then only I'll take you. Now he knows Indian ships will not help. So he called foreign ships. He had a friend in the foreign. So he went to a foreign ship guy and he came and said, dear ship guy, come to India and collect me and go. Because I don't want to live in India. So what he did, he went to his foreign ship friend. He went to his foreign ship friend. He went and he told his foreign ship friend, dear foreign ship friend, you come to India and you collect me and go. What this foreign ship friend did? He came to India. He collected Mr. Vijay Mallya and left. Now Vijay Mallya will come back to India, not come back to India. Which means what has the foreign ship done? Foreign ship has come to India, collected Mr. Vijay Mallya. So foreign ship came to India, collected Vijay Mallya. Vijay Mallya has left India, not going to come back. Not going to come back. Yes or no? Yes or no? This is your story. This is your story. See, notice carefully, all the 5 points are here. Notice carefully, all the 5 points are here. First time coming and saying, Mr. Vijay Mallya has Kingfisher, not relevant. Okay, Vijay Mallya and Nirav Modi create one F1 racing, not relevant. F1 racing is planned to shut down because they are incurring losses, which means AOP BOI discontinued in the previous year. AOP BOI discontinued in the previous year. So this is your point number 1. This is your point number 1. Yes or no? Yes. Then I'm coming and saying after AOP BOI discontinued, people are asking money, not relevant. After they are asking money, Vijay Mallya decided to sell Kingfisher. So therefore, he sold all his assets. This is sale, dispose, charge of the assets with an intention to avoid taxes. If he has sold his assets, Kingfisher is not relevant, which means he decided to close Kingfisher. This is business or profession discontinued in the previous year. Business or profession discontinued in the previous year. Tried to call his flight friends, did not help, not relevant. Tried to call Indian ships, did not help, not relevant. Called his foreign ship. Called his foreign ship. Foreign ship came to India. Foreign ship came to India. Non-resident shipping company coming to India, leaving India. Coming to India, leaving India. Mr. Vijay Mallya on board the ship, left India permanently. Mr. Vijay Mallya on board the ship and left India permanently. Individual leaving India with no intention of coming back. Individual leaving India with no intention of coming back. Yes or no? Yes. A simple story, all 5 answers. A simple story, all 5 answers. If you can remember the 5 things, great. If not, you can remember the story. You can remember the story. Quickly recapping the story, what is happening? Vijay Mallya decided to create one F1 racing, called up Nirav Modi, created an AOP BOI. Created an AOP BOI. F1 racing incurred losses, so F1 racing shut down. AOP BOI discontinued. He wanted money, so he sold the assets of Kingfisher. Sale of assets with an intention to avoid taxes. Since he sold all the assets, Kingfisher is now discontinued. So business or profession discontinued. Calls his non-resident shipping friend. Shipping friend coming to India. Non-resident shipping company coming to India. Shipping company takes Vijay Mallya and leaves India. Individual leaving India with no intention of coming back. Individual leaving India with no intention of coming back. Clear? Yes, yes. You can either read the theory or you can read the story. I will give you 2 minutes. You have a page in the last. You have a page in the last. In your concept book itself, you will have some empty page. Okay, I think it will be here next page. Okay, if you feel like you want to write the story, quickly note it down. You can use your own English. You can use your own English. Quickly note it down. Yes, ma.
Certain cases, all these are subjective. Like, how will the assessing officer know some person is going to leave with an intention to not come back? All those things they'll know only subsequently, right?
Technically, yes. So, if I have to give you a simple example, you can always know about a discontinuation of AOP BOI, correct? No? Because what will happen if you're dissolving something, then you have to get a legal validity. Okay. Second, what will happen if you're looking at business and profession discontinued, that also. You cannot just like that close the company. You have to do a liquidation proceedings. In liquidation proceedings, automatically what will happen? The NCLT or the liquidator will come and inform the income tax also that there is some dues from you, right? The problem will predominantly come in the individual leaving India, okay? Because individual leaving India with no intention of coming back is where the challenge is. This is something which the assessing officer will not get to know easily, okay? Technically, what will happen is, if at all you are leaving India, if at all you're leaving India, you will normally leave India by doing what? By creating a passport, correct? No? Yes. Now, when you create a passport itself, you also have to get along with the passport something called as visa. Yes. And when you get a visa in different ways. One is called as work visa, one is called as living visa, one is called as permanent visa and all those things. So, if I'm giving you a temporary visa, then I know that you will come back because that is what government wants from you. Okay. But if you get a permanent visa, like for example, you're going to get married to someone, and you decide to live permanently outside India, you'll have to get a permanent visa. Okay, that permanent visa will now give a hint to assessing officer that boss, this person will not come back. Correct? So there are ways to find out, but practically does it happen? Not really. Okay, practically I've never seen a scenario where just because you get a visa for someone, assessing officer will come and stand on your door. That doesn't happen that way. It's a very remote scenario, but technically these are some guidance or safety measures given so that tomorrow no one is questioned for it. That's all is the idea. Okay, quickly note down the example so that we can go forward. Done, Ritanya? Yes, great. Okay. Now, whatever topics you're learning here, technically this is not a part of chapter number 1. It is not a part of chapter number 1. We have another chapter called as liability in special cases, where basically the same thing will be elaborated. I'm just giving it in the first chapter itself because it makes more sense. Okay. So in liability chapter, you will not find it once again. I say study material, maybe you'll find it in that chapter also. It is not relevant. You can read it here also. At the same time, some of these things have some special provisions also. Like for example, for shipping company and all, they have come and said, before you leave India, you have to pay tax of 7.5% and go. You have to pay tax of 7.5. They have given a special rate and everything. Okay. Don't worry about all this because these rates will again come back to you. It will come back to you when we do non-resident taxation. Okay. So when we do non-resident taxation, anyway, I'll discuss all those things. So I'm not putting it right now. In a study material and all, you'll see it will come and say non-resident shipping company before leaving India has to pay 7.5 and everything. That is not relevant for you right now because it is too early. It is too early. When we do international taxation, that time we'll come back to that topic once again. Okay. Right now you can ignore it and go. Right now you can ignore it and go. Clear? Yes. Awesome. Perfect. Let's go back to our charging section and see what we have completed. We have completed income tax, total income, person, previous year, rates in force, assessable, assessment year. With this is our charging section done. With this we are done with our charging section. And if you notice, technically we are done with our chapter also. Technically we're done with our chapter also. In the chapter, you'll notice in the front and all, you have some definitions. You have some definitions of what is an assessee, what is an assessment, what is an assessing officer, what is your India. Okay, all these definitions are not so relevant from exam perspective. Anyway, these definitions are something which you would have learned in your inter also. You would have learned it in your inter also, so there's nothing great about it. No one is going to ask you definitions and all in exams, so don't worry about it. You just need to know the idea. Just need to know the idea. Quickly reading, you can just read it and say India means territory of India, territorial waters of India, subset sea oil, seabed, suboil, underlying waters, which is up to 12 nautical miles. Which is up to 12 nautical miles. Then they are coming and saying any kind of continental shelf and exclusive economic zone. Any kind of continental shelf and exclusive economic zone which is under 13 to 200 nautical miles. Then they're coming any other specified maritime zone and airspace above its territory and territorial waters. In simple words, if I have to put out a chart, let's say this is India borders. Let's say this is India borders. In this India borders, for the first 12 nautical miles, it is called as territorial waters. Okay. After that, from 13 nautical miles to 200 nautical miles, it is called as exclusive economic zone. It is called as exclusive economic zone. They are coming and saying, boss, the whole of India is anyway India. 12 nautical miles is also India. 13 to 200 is also India. Any kind of airspace above, any kind of airspace above, any kind of seabed or subsoil, any kind of seabed, underground, above the ground, everything is covered. Everything is covered. So you take the land, you take the water next to the land, you take the air above the land, you take the underground below the land, you take the underground below the land, you take all these items, it will be called as India. It will be called as India. Yes or no? Yes. Don't worry about the fancy English and all. Continental shelf, maritime zone, airspace and all. Simple words: above space, below space, water space. That's all. Okay. Clear? 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 Yes. This marks the end of your chapter number 1. This marks the end of your chapter number 1, where if I have to recap quickly, I told you how the income tax is being levied as per article number 265. Laws are being created in article number 246, where income tax is a part of central law. Income tax is a part of central law. Then we differentiated between direct tax and indirect taxes. We told that law is bigger than act. Law is bigger than act, where law comprises of various items which are classified into legislative body, administrative body and judicial body. In legislative body comes Income Tax Act and Finance Act. In administrative body comes income tax rules, circulars, notifications, and in judicial body comes case laws. In judicial body comes case laws. Then we started discussing the section number 4, which talked about our charging section, where we came and said that if you want to know the total income, you need to know first what is income. Income means any income defined under 224. Any income defined under 224. This income generally will always be covering revenue receipts, but may or may not cover capital receipts depending on whether it is included. What is a capital receipt? The items which are one time. What is revenue receipts? The items which are regular. If you end up selling your capital item, it is called as capital receipt. If you use your capital item to generate revenue, it is called as revenue receipt. If you are into the business of shares and everything, it is a revenue receipt. But if you are not in the business, it is a capital receipt. If you have any kind of gift given, it is capital receipt. If you are terminating anything in an employment, it is capital receipt. If you are terminating your business, it is capital receipt. If you are terminating agency, you have to check whether it is single agency or multiple agency. Single agency capital, multiple agency revenue. And then we read 2 case laws where we came and said if you have entered into a liquidation damages for procuring any capital assets, it is a capital receipt. At the same time, we also came and said that if you have paid some technical collaboration fees for creating a JV, that is also a capital expenditure and the money is also a capital receipt. Then we came and discussed what is a person, previous year and assessment year. Then we discussed what is assessable and income tax rates in force Clear? Yes. Now to elaborate a little further, total income, like I told you, is defined by 5 heads of income. Total income is defined by 5 heads of income. What are the 5 heads of income, Rahul? It is income from salaries, income from house property, profits and gains of business or profession. I want you to pay special focus on these items. It is profits and gains, business or profession. Be very careful about where the and is and where the or is. It is not profits or gains, it is profits and gains. It's not business and profession, it is business or profession. Okay, so income tax defines 5 heads of income: income from salaries, income from house property, profits and gains of business or profession, capital gains, other sources. You add all the 5 items, it will become income from other heads. Income from all heads. It will become income from all heads. In this, you will reduce any kind of losses and all which you have. You will arrive at gross total income. In that gross total income, you will reduce chapter 6A. You will reduce 10AA. You will arrive at your total income. This is what we were discussing. On this total income is what you pay tax. Yes or no? Yes, this is the simple straightforward definition of total income. Now for those who remember, I told you that from your syllabus, income from salaries has been removed. Income from HP is also removed. What you are going to read from your syllabus is your PGBP, capital gains, other sources. Along with some special cases, but this is what you are going to learn. First 2 chapters not there. First two chapters not there, but I did clarify to you that the first two chapters, while it is not there, they are asking some basic things from you. They're asking some basic things from you. So that basic things alone I will explain to you. That basic things alone I'll explain to you after we do the next chapter. Okay. So what we're going to do is we are going to skip the income part. We're going to skip the income part and we're going to do tax first. We're going to do tax first, then we'll come back to income. Okay. So the next chapter is going to talk about your tax rates. What is it going to talk about? Your tax rates. Here in chapter number 2. Can we, everyone? Yes, we're going to start with chapter number 2. Before we start with chapter number 2, I generally have a policy to give my students a golden rules concept. I generally have a policy to give my students golden rules concept. So I'm going to put out a list of golden rules. This golden rules is nothing but a steps. Nothing but what? Steps. You follow the steps properly in exam, the answer will come out perfectly well. You cannot jumble. You'll have to follow the steps as it is given. If you follow the steps as it is given, the answers will always come out right. You mix up the steps, the answer may go wrong. Yes, I call it my golden rules of taxation. The book which you have, in my concept book, do you have a page on the last? End. Last page blank irukla. And the last page ma. Yes. So what you do is in the concept books you will find the last page, the very last page as a blank page. Okay. Put a heading called as golden rules of taxation. Ritani, I just heard from Hari sir that your book will be donezoed today. Okay. So you should have your concept book in your hand today. Please make sure that whatever notes you have made, just pen it down in the book also. Okay.
Yeah.
Yes. In the last page of your concept book, we are going to write something called as golden rules of taxation. Step number one is identify the question and its requirement. What is step number 1? Identify the question and its requirement. Yes. Identify the question and its requirement. Yes. May look like a very silly step. Yenada Rahul basic solinterke, but one of the most important steps in exam. People 99% fail in exam because they don't follow the step properly. Understand, no? If the question is simply coming and saying find my tax, your job is to find tax. Okay. Did the question come and tell you what will be the refund, what will be the tax due and everything? No. In this case, don't try all those. If the question is simply coming and saying find out what is my profits and gains of business or profession, your job will end at profits and gains of business or profession. There are some adjustments of IFOS also, PGBP also, capital gains also. Let me find out my total income. Let me find out my tax payable. Let me give analysis and all. Not required. Stick to the question. See what the question is asking. That is what you need to answer. Don't go beyond expectations. At the same time, don't go under expected also. If the question is asking you to find out tax, you have to find out tax. Okay, don't stop at salaries and come and say I cannot find out tax, so you give me mark. They will not do it. If the question is asking for something, follow the logic. Clear? Yes. Step number 1. What is step number 1? Identifying the question and its requirement. Step number 2. Determine the person. And his residential status. Step number 2 is determine the person and his residential status. Determine the person and his residential status. Now, since you are in finals, let me clarify to you. In inter, when I take a class, I always come and say individual is the most important person. Companies and all are not tested in inter. Apdiye ulta for finals. For you, what is more tested is companies. For you, the most important thing which is tested is companies and trust. The most important thing which is tested is companies and trust. Rahul, does that mean that we don't have to read anything individual related? You do have to do it. You do have to do it because you have a chapter called as DTAA coming in. You have a chapter called as DTAA coming. What is DTAA? Double taxation avoidance agreement. Double taxation avoidance agreement. Now, double taxation avoidance agreement 99% of the times will only apply to individuals. Therefore, you still have to read individuals. The only difference is you don't have to read it in length. Okay, அதனால தான் salaries எல்லாம் remove பண்ணிட்டாங்க because they told boss salaries and all has too much data. They have too much data. Everything is individual related. I want you to know individual concepts. But not very detailed. Some level of concepts is what I want to know. Okay, so when we do in the class also, when it is an individual related concept, I will come and tell you, just go through it, not relevant. Okay, so I will tell you what is relevant, what is not relevant. I will ensure that the 500 pages become 300 for you. Okay, adu na pannidven. Okay, I will ensure that the 500 becomes 300 for you. I will come and tell you what and all to read, what and all to ignore. Clear? Yes. So the second step is determining the person and his residential status. For your exams, predominant persons are companies. Predominantly in exams, they will ask you companies only. This is what is step number 2. Clear up? Yes. Step number 3. Determine whether the income is taxable or not. Determine whether the income is taxable or not. Yes, Rahul, what are you talking about? I am talking about 2 chapters here. Chapter number 1 is called as scope of total income. Chapter number 1 is called as scope of total income. Chapter number 2 is called as exemptions. Chapter number 1 is called as scope of total income. Chapter number 2 is called as exemptions. Yes, you know, no, in inter also you had residential status and scope of total income. That is part 1. Exemptions is your exemptions, which means an income may be taxable. And income tax exempt pannirukanga. So you remove it at step 3 itself. Yes, next, step 4. Classify income into the 5 heads. Classify the income into the 5 heads, or as per NPO rules. Classify the income as per 5 heads or as per NPO rules. Rahul, what is NPO rules? I told you in finals you have this chapter called as charitable organizations. Okay, so charitable organizations none of the heads will apply. They have a different mechanism itself. So that will be taking care of it. So it is classify the income into 5 heads of income in case you're doing business. In case you're doing any kind of normal activities. If you're doing charitable activities, it will be as per NPO rules. Yes, sir. Yes. Step number 5. Provide the deductions or exemptions in the relevant heads. Provide the deductions or exemptions in the relevant heads. Yes or no? Yes. You are going into PGBP, there will be some exemptions. You go into HP, there will be some exemptions. Those things you give. Done? Yes. Now, think about it. You have classified your income into 5 heads. You have given all the exemptions and deductions. You will arrive at income from all heads. In that, what will you do? Step number 6. Club income of other persons. Club income of other persons. Yes, you have taken your incomes, now you are bringing someone else's income also. Step number 7. Set off any losses / gains. 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 Set off any losses / gains UD if available. Set off any losses or UDs if available. Yes, you have losses from last years and everything. You can come and claim it off. You can come and claim it off. Now, I am telling you, think about it. You have 5 heads of income. You have clubbed someone else's income. You have set off losses. You have now arrived at. You will now arrive at something called as gross total income. You will now arrive at something called as gross total income. Yes or no? Yes. Step number 7 will give you what is called as gross total income. In step number 7, after you have found your gross total income, you will now claim. Very good. Chapter 6A. Deductions. You will now claim a chapter 6A deductions or 10AA deduction. You will now claim your chapter 6A or 10AA deductions. Yes or no? Yes or no? Yes. After you claim your chapter 6A or 10AA, you will arrive at something called as total income. You will arrive at something called as total income. Yes or no? Yes or no? Yes. Step number 9. Step number 9. Yeah. Step number 9. Solo papa. You now have your incomes. What will you do? You will compute your. Very good. So step number 9, compute tax as per finance rates. Compute tax as per Finance Act rates. Step number 10, compute tax as per MAT / AMT. What? MAT / AMT. MAT is minimum alternate tax. AMT is alternate minimum tax. AMT is what you would have learnt in your inter syllabus. MAT is what is in final syllabus. MAT is what is in final syllabus. Yes. Step number 11. Step number 11. Compute tax as per special tax regime. Compute tax as per special tax regime. You have these special taxes and all, no? 115 BAC, 115 BAA, BAB. Next chapter we'll learn. Next chapter we'll learn. Step number 12. Step number 12. It is called as step 9 or step 10, whichever is higher. It is step 9 or step 10, whichever is higher, versus step number 11, whichever is lower. It is step 9 or step 10, whichever is higher, versus step number 11, whichever is lower. Whichever is lower. Rahul, what is this? Why is this? We will learn. We will learn. Don't worry about it. Okay. This is referred as gross tax. What is it referred as? Gross tax. It is referred as your gross taxes. Can we go forward? Can we go forward? Yes. Now notice carefully. You have started from your income. You have arrived at your tax. You have arrived at your tax. Step number 13. What will you do? You look at your tax and smile at it, or you will claim, you will pay it to government? Will you look at your tax and smile, or will you pay it to government? You'll pay it to government. Yes or no? So what you have to do now, you have to pay this money to government. You have to pay this money to government. Before you pay this money to government, you will claim something called as reliefs. You'll claim something called as reliefs. Rahul, what is reliefs and all? You have certain reliefs. AOP core relief, double taxation core relief, all those kind of reliefs. Claim reliefs is any within bracket AOP / BOI / DTAA / salary reliefs. Actually, salary is anyway not a syllabus, so leave it off. Okay, you have reliefs under AOP BOI, you have reliefs under DTAA. Claim all your reliefs. Claim all your reliefs. Then you will start paying taxes. You'll start paying taxes. So what will you do? Claim TDS, TCS, advance tax, self-assessment tax. Yes, if you have paid any TDS, TCS, advance tax, self-assessment tax, all those things you can claim off. All those things you can claim off. Step number 15. Step number 15. Add interest or fee. Add interest or fee, if anything payable. Yes or no? Add interest or fee if anything is payable. If you have anything like that payable, like in 234A, 234B, 234C, 234F, whatever it is, all those you can add off. All those you can add off. This will be called as final tax payable / refundable. This will be called as your final tax payable or refundable. Yes, yes, yes. Now, Rahul, I have had my income. I have computed my taxes. I have paid off the taxes also. I have paid off the taxes also. Everything is fine. Everything is fine. Will I leave it just like that? Will I leave it just like that? Or I have to tell the government that I have done everything properly? I have to tell the government that I have done everything properly. How will I tell the government, ma? How will I tell the government I have done everything properly? Very good. File return of income. File return of income, full stop. Revise income if necessary. File return of income, revise the return if necessary. Yes or no? Yes or no? Yes. So you will file your return of income and tell the government that, sir, see, I have done everything properly. I have done everything properly. If required, you will revise your return also. If required, you will revise your return also. Step number 17. Update the return in case of miss out. Update the return in case of miss out. Update the return in case of miss out. This was a concept which you probably may not be aware about. It was introduced last year, 2 years back, called as updated return. Called as updated return, where basically they had brought in a concept where they came and said that if you have filed your return earlier, but you forgot to pay some money to the government, and now you remembered that you have to pay this money to government, you can file an updated return. Informing the government that, sir, by mistakenly I missed it out earlier, now I am paying the money to you. This is purely department friendly. You cannot use this to go and tell the government that, sir, I missed it to claim something, so I want more refund. They will not give you a single rupee extra refund. Okay, all refunds and all can be done only till the revision part. All refunds can be done only till step number 16. Step number 16 kapro, if you have extra payable, you can go to step number 17. If you have no payable, you will leave it there itself. You will leave it there itself. Clear? Yes. Now you have found out your income, you have paid your taxes, you have informed government about your return also. You have informed government about your return also. Will government be happy and leave it off, or will government like to check? Government will like to check. Yes. Step number 18. Step number 18. AO. Who's AO? Assessing officer. AO initiates assessment if necessary. AO initiates assessment if necessary and modifies tax payable. AO initiates assessment if necessary and modifies tax payable. Possible? No. I came and said, sir, I want 100. He's saying he wants 120. Who's more right? You don't know. Yes, so he issued a 120 order. He issued a 120 order. What will you do? Will you sit silent? Will you sit silent? What will you do? File appeals if necessary. File appeals if necessary. Yes, you have initiated assessment. Assessing officer is saying, boss, this is what the tax is. You are telling, no, sir, tax is something else. Tax is something else. You will file an appeal. You will file an appeal. Now, this can be various levels: CIT, ITAT, High Court, Supreme Court. Yes, at the end of the day, you will make a decision that you have to either pay or you have to get more. You have to either pay or you have to get more. Yes, appeals are done. Appeals are done. At this stage, step number 20. Pay differential taxes. Pay differential taxes along with penalty if applicable. Pay differential taxes along with penalty if applicable. Clear? Clear? Yes, this is my step 20 golden rules. This is my step 20 golden rules. Okay. Okay. Yes, if you do this step 20 golden rules, technically you're done with the subject. Technically you're done with the subject. This 20 steps is what your subject looks like. Yes, think about it. Let's go back to our content and see. Let's go back to our content and see what are we talking about. Yes, we're going back to our content and we're seeing which chapters are we talking about. Which chapters are we talking about? Starting from step number 1. Starting from step number 1. What is step number 1? Identifying the question, not relevant. Yes, step number 2. Determining the person and his residential status. Determining the person we did in chapter number 1. Yes, no. Determining the person we did in chapter number 1. Then determine his residential status. Residential status, I have put it in part E. Residential status. Okay. Next. Income is taxable or not. You are determining whether the income is taxable or not. Step number 3, scope of total income. Step number 3, scope of total income. Male engyo, you will find exemption somewhere. Income which does not form part of total income. Income which does not form part of total income. Done. Next, step number classifying the income into 5 heads. The whole first part. The whole first part is classifying your income into 5 heads. Till where will it come, Rahul? It will come till 158. It will come till 158. Step number 4. step number 4. At the same time, your whole part C is step number 4. Your whole part C is step number 4. While we are classifying into 5 heads, you will have other items from here also. You will have other items from here also. The whole step number 4 is here. Yes, the NPOs and all which I told you, see, non-profit organization reliefs. Okay, so everything is here. Everything is here. So it's this, the மேல இருக்குது items plus கீழ இருக்குது step 4. Plus கீழ இருக்குது step 4. Then provide your deductions and exemptions. So which means this is not just step 4, it is also step 5. It is not step 4, it is also step 5. So it will become step 4 and step 5. This will become step 4 and step 5. Next, clubbing your income, which is step number 6. Next, set off and carry forward, step number 7. Next, claim chapter 6A, step number 8. 10AA, step number 8. Next, compute tax as per finance rates. So step number, chapter number 2 is step number 9. 8 or 9? 9. Step number 9. Agriculture income is also step number 9. Agriculture income is also step number 9. Taxation of unexplained income is also step number 9. Step 9 and step 9. Compute MAT and AMT. So 20 and 21. So step number 10. Step number 10. Done. Done. Then you have compute tax as per special tax regime. So step number 11. Step number 11. Step number 12 is just 9 versus 10, whichever is higher, versus 11, whichever is lower. Next, you will file your return. So you will claim relief. Relief is part of respective chapters. Next, you will claim TDS, TCS. Step number 13, 14. 14. So TDS is step number 14. Payment of taxes is also step number 14. Next, step number 14. Chapter number 33. Next, add interest and everything is a part of step number chapter number 33 or chapter number 34. Next, file your return of income, which means step number 16, chapter number 34. Next, same. So chapter number 34. So step number 17. Next, AO initiates assessment, step number 18, chapter number 35. Next, appeals is chapter number 36, step number 19. Step number 20. Done? Done? Yes, this is all your steps are. This is all your steps are. If you notice, technically everything is completed. Technically, we have completed all chapters in your golden rules. Rahul, you are missing out certain chapters. If you notice, the next part of the chapters is your international taxation, which is a part of your steps only. This is a part of your steps only. If I have to clarify, transfer pricing will be a combined part. Okay, transfer pricing can happen at 2 stages. It can happen yourself also, or it can happen at appeal stage also. It can happen at assessment stage also. So this technically will be a part of step number 18. Or will be a part of the total income step. What is the total income step? 8. So 18 or step 8. 18 or step 8. Non-resident taxation will be a part of step number 3. Determine whether the income is taxable or not. Okay. Then special provisions, again step number 3. Taxation will be step number 8. 9. No. Compute taxes per normal rates. So step number 9. Step number 9. Double taxation relief we discussed in. Very good. Step number 13. Claim TDS, TCS, double taxation reliefs. Yes. Advance ruling and all is extra. These are all administered. Penalty engu endudilla. Where did we write penalties, ma? Pay differential taxes along with penalty solirpen. Step number 20. Yeah, very good. Step number 20. Step number 20. If you notice, the balance items are just normal administrative provisions. Modes of loans and payments. நீ எப்படி pay பண்ணணும் அந்த மாதிரி scenario. So this is extra. This is extra. Tax planning is extra. Liabilities is extra. Miscellaneous and all, you know it is extra. Miscellaneous, you know it is extra. SFT is where they are coming and telling how to pay SFT. So extra. So extra. Audit reports is a part of your process. It's a part of your process. This is all extra. This is all extra. Equalization levy and all becomes a part of your other act. It becomes a part of your other act. So this is additional act, additional act, additional act, additional act. மிச்சம் இருக்கிறது 3 is theory. மிச்சம் இருக்கிறது 3 is theory. There is no rules and all, pure theory chapters. They will give you one question, you have to write the theory. They will give you a question and you have to write the theory. If you notice, technically we are done with all the chapters. We are done with all the chapters. Yes or no? Yes or no? Yes. This is how your golden rules look like. This is how your golden rules look like. In this, you can just include one additional item. One additional item. It's not a step. It is a heading. We call it as proactive measures. We call it as proactive measures. Okay, this is not a step. It is not a step. It is just for you to know. Proactive measures. 1. To save taxes, you can do advance ruling. You can do advance ruling. To avoid prosecution, you can do dispute resolution. You can do dispute resolution. And to okay, so the first one is to save taxes, you can do advance ruling. To avoid prosecution, you can do dispute resolution. To avoid tax avoidance, you can do GAR. You can do GAR. These are also a part of your chapters if you notice. Advance ruling, yeah, you have advance ruling here. This is your proactive measure. This is your proactive measure. GAR is a part of tax planning measure. So this is your proactive measure. One more item I told you. Dispute resolution. Huh? Yeah, so dispute resolution is here. So this will become a proactive measure, which means these are all the scenarios which are generally not a part of your regular parts, which are generally not regularly happening. These are something which you extensively proactively do, which you generally extensively proactively do. For example, I am now aware that there is a dispute which is going to come up. Okay, now I know I have cheated the government. I know I have cheated the government and I have been picked up also. I have been picked up also. 100% sure that if the government goes forward with this, I will be put in jail. I will be put in jail. Now, in this scenario, do I know that I'm going to go to jail? Yes. In this case, can I voluntarily go and tell someone that, yes, sir, I know I have done a mistake. I accept my mistake. Don't put me in jail. I will not do it next time. Possible? Not possible. That is called as dispute resolution. That is called as dispute resolution, where I will go to a special authority. I'll go and inform the special authority that, sir, there are some mistakes which I've done. I know I've made that mistakes, but manachiranga sir, paama pasanga. Yes, I will not do it ever in life again. I will not do it ever in life again. This once time you don't put me in jail. This once time you don't put me in jail. That is called as dispute resolution. So I'm avoiding prosecution. I'm avoiding prosecution. What is advance ruling, Rahul? Before even something happens, I don't even know what will happen. I don't even know what will happen. I am coming and saying that, Rahul, I don't even know what will happen to this scenario, but I want to be safe. I want to be safe. Unnecessary. Tomorrow I do this transaction and our assessing officer is coming and saying you have done a wrong transaction, you have done a wrong transaction. Before even I do the transaction, I will enter into something called as advance ruling. I will enter into something called as advance ruling, where I'll go to an authority and I'll come and say, sir, I'm planning to do this transaction. I am planning to do this transaction. You tell me what do you think is right. You tell me what do you think is right. He will say, Rahul, taxable, not taxable. If he says Rahul, not taxable, I can use this and I can go to my department officer and say, sir, see sir, one authority has come and told it is not taxable. Don't come and ask. Don't come and ask. Yes, so this is for me to save taxes. This is for me to save taxes. Last item I told you what? To avoid tax avoidance, which means this is not something which I do. This is something which assessing officer does. Yes, if he finds out you're doing a transaction, which he knows that is cheating the government, he can invoke GAR. Which is called as general anti-avoidance rules. Where he'll come and say, boss, you have entered into a transaction which I know you will definitely cheat the government. Before you come and fight with someone, I will itself invoke GAR and I'll come and say, you are trying to cheat me. These are all proactive measures. What measures? Proactive measures. I am coming and telling what will happen. Clearer? Yes. If you now notice, we are technically done with our syllabus. If you technically notice, we are now done with our syllabus. This is how our chapters look like. Any doubts till now? No? Yes. Looking at the formula, you will notice I have split my subtopics into subparts. My intention is, it is better if we start with tax computation right now, so that you know what tax looks like. We will start with what tax computation looks like in part number A. Then we'll go to part number B, where we'll start finding out incomes one by one. And we'll try to find out my total income. Till the very end. Along with some extra MAT, MET and all those extra adjustments for us to find out my total income. Then we will go to part number C, in which we will come and discuss about special items. Meaning, generally what you discussed in the other chapters is what we will do. But for some special people, some special changes may happen. That special changes is what we will discuss in part number C. Okay, technically part B and part C go hand in hand. There is no difference between part A and part B and part C, but I've splitted them into a subsequent chapter so that it is easy for us to understand. When you read that entity as such, you will know that yes, tomorrow in the entity idella pannano. Okay, that is what the idea is. So I've split part B and part C separately for our ease of reference. Then we will go into administrative provisions, where we will be discussing about, after you have computed the taxes and everything, what next steps should you do for you to make yourself safe. Then we will discuss about what happens if assessing officer brings up something on you. How do you defend yourself? Moving on to the next part, which is our international taxation. Technically, international taxation, like I told you, is a part of part B and part C together. But since this is very relevant only for non-resident scenarios, I am keeping it separate. It's because ICI in old syllabus gave 30% weightage for this independently. In new syllabus, they have not defined the weightage. So it may be any number. But it is better to read this individually rather than reading it along with part C and part B, because otherwise it will be confusing. Okay, so we will touch this international taxation in the very end of the batch, where we will try to understand, if you are found out to be a non-resident, how do you do yourself? Moving forward, we will then come to our small mokke chapters of international administrative provisions, from part F to part H. These are very I wouldn't say non-important chapters, but they carry very less weightage. Technically 42 and all will come once in a while. Very rarely it will come. 46 will be one 4-mark question which may come. 47, 48, 49, 50 has never been tested till date so much. It has been tested, not so much. Okay, so they together maybe could carry another 4 marks. 51 has come this time newly. 53 has come this time newly. So I'm expecting either one of the two to have one question in exam. So another 4 mark na vechiko, 4 to 6 marks ange vechiko. Okay, balance and all chapters together in theory will carry 4 marks. In simple words, midinju pona, these balance chapters will carry about another 10 marks na vechiko. Okay, 10 to 12 marks maximum. So therefore part F, part G and part H will be a running marathon. We will not elaborate on this so much because it is nothing to understand so much. We will definitely discuss every single chapter in detail, but from exam perspective, they are not very significant. So I have distributed my notes itself in such a way that I can tell you which is significant to read from exam and which is something to pass through. I'm not saying ignore the chapter, but something to definitely pass through. Yes, this is what the whole format is. I'm going to stick to this format because this is what I feel will be more convenient for us to understand the subject better. The study material will have a different format. They jumble up chapters. Other faculties will also teach you in jumbled manners. They will do international taxation somewhere in the middle, suddenly go to another chapter, then go to another chapter. I want to follow a sequence. Because then it makes more sense for me. Okay, so we're going to follow the same sequence. I hope everyone is aligned to that. Does it make sense to you? Yes, Tanya? Yes, perfect, awesome. With this, we have completed what is chapter number 1, and we are now moving to chapter number 2. We have about 45 minutes, so I'm going to take a quick run through on chapter number 2 because most of these things are something which you have already done in inter. I don't want to elaborate so much. I will give you those intricacies of what those things which may be a change from your last time you did inter. Okay, inter last time when you did, compared to that right now what changes and all has been made, that is probably something which we will elaborate on, but beyond that I will not like to specify so much and spend so much time on this because it doesn't make sense. I don't have to do sums around this. Okay, so we're going to quickly look at chapter number 2, which is your rates of taxes. We are jumping our steps and we are going to step number 9. Which is computing tax rates as per Finance Act. Before we start this chapter, you need to first know a few things. In this chapter, every person has a different tax rate. Every person has a different tax rate, which means we will look at on a person level. At a person level. What are the persons which we have, people? We have individual, then HUF, then firm, company, AOP, BOI, local authority, then artificial juridical person. Yes, now for all these people there are different tax rates. Like I told you, for your exam purposes, the most important person is companies. So that is what we will be spending more time on. Firm and all is straightforward. Individuals, we will spend time to the extent of what is relevant for double taxation. Beyond that, we will not spend so much time. AOP, BOIs and all is not as such relevant for exam. Not in this chapter. I told you we have a special chapter, assessment of various entities. We have another chapter. The mechanism is very different. So that mechanism is what we will learn. We will not learn this mechanism. Local authority and all has never been coming in exam. So local authority, AJPs and all is not come for exam, so not so much to discuss. Similarly, HUF will also not come for exam. Keep this thing in mind. As such, we will discuss everything. But I'm just letting it know. Okay, exam perspective, what you need to remember is what I'm trying to tell you. Clear up? Yes. We will start with the first items called as individuals. But before I start this chapter, I always come and tell my people, every chapter also has its own golden rules. This chapter has 2 golden rules. Rule number 1, the golden rule is any total income which you take for this chapter, should be rounded off to the nearest, any idea? 10 rupees. Very good. Should be rounded off to the nearest 10. Yes, before you start this chapter, before you start computing taxes, one golden rule to always follow, that the total income will always be rounded off to the nearest 10. Rahul, nearest 10 irukadanaala, will there be a significant difference? No. But is it important to do? Yes. This carries half a mark in exam. If you miss out this round off, ICI will do two things. Either they will cut off half mark and give you balanced step marks, or if the examiner is not very happy, he may strike out the whole thing also. So be extremely careful. Be extremely careful. First step is what? Total income should be rounded off to the nearest 10. Then rule number 2, final tax payable should be again rounded off to nearest 10. The final tax payable should also be rounded off to the nearest 10. This is 2 rules to follow. Now Rahul, what is this final tax payable? In your steps, in your golden rule steps, there will be one step where I would have come and said after interest and everything, this is the final tax payable. This is the final tax payable. Can you tell me what step number that is? Step number 15. Step number 15. So in simple words, what and all should you round off, Rahul? You should round off step number 8. You should round off step number 8 and step number 15. You should round off step number 8 and step number 15. These two things carry half mark. These two things carry half mark. Be extremely careful about this. Be extremely careful about this. Clear? Can we go forward? Yes. Moving on to the chapter. Moving on to the chapter, we're looking at chapter number 2, which is your rates of taxes. Now, as we start this chapter, you may have already known it in enter, but just to reiterate it once again, in this chapter we have 3 kinds of taxes. We have 3 kinds of taxes. One is called as basic tax. What is it called as? Basic tax. Next one is called as surcharge. Next one is called as surcharge, and the next one is called as cess. And the next one is called as cess. Yes, we have 3 components. One component is called as basic tax, one component is called as surcharge, and the third component is called as cess. Rahul, what is basic tax? It's the tax on the income. Basic tax is the tax on income. Tax on income. Rahul, what is surcharge? Surcharge is tax on tax. Surcharge is tax on tax. Yes or no? Yes. Basic tax is the tax on the income. Income kamala pandra the tax is basic tax. Surcharge is tax on tax. So which means surcharge is not done as a percentage of income. Surcharge is done as a percentage of basic tax. Surcharge is done as a percentage of basic tax. Cess is a tax on all tax. Cess is a tax on all tax. What do you mean by all tax, Rahul? Final tax ku mela cess varum. Final tax ku mela cess varum. That tax meaning including surcharge also. That tax meaning including surcharge also. Yes or no? Yes. So 3 components which you have in the syllabus. One is called as basic tax. One is called as surcharge. One is called as cess. One is called as cess. Just to take a step further. Basic tax has been given the authority in article number. Where did we learn? Article number 265. Yes, no, we told no. 265 comes and gives the powers to levy tax. So Article 265 gives the powers to levy basic tax. Article 265 gives the powers to levy basic tax. Surcharge is given by an article called as 271. Surcharge is given by an article called as 271. This article of the Constitution comes and says, whenever the government is liable to levy taxes, government can also levy tax on tax. Government can also levy tax on tax. To whom, to what, and everything is a different story. Yes, but 271 gives the authority. 271 gives the authority. For cess, there is no article. For cess, there is no article. As such, there is no defined article which comes and gives you the power to levy cess, but there is a generic article. There is a generic article in the Constitution which comes and says, if nothing is given in other articles, government can use this article to levy anything else. Government can use this article to levy anything else. And the article which they are levying cess. And the article which they are levying cess. In Income Tax Act, this cess at this point of time is called as health and education cess. What is it called as? Health and education cess. Back if those times, if you were prior to 2017 or something, 2019 or something, prior to 2019 or something, you might have seen cess being 2 components. Yes, one is called as higher and secondary education cess, one is called as senior higher and education cess. They removed everything and in 2019 it became health and education cess, which is currently being levied at the rate of 4%. Which is currently being levied at the rate of 4%. Yes or no? Yes or no? So what is the three components? We have basic tax, we have surcharge, we have cess. In that one item I've already told you, which is your cess, which is levied at the rate of 4%. Now what is it levied on? It is levied on the final number. It is levied on the final number. Clear, not clear? Yes. How do I approach this chapter, Rahul? Generally my logic is I approach this chapter by clarifying your people into three. By clarifying your people into three. I always like to categorize my people. Okay, so whatever person I have, I categorize them into three categories. I categorize them into three categories. Category number one is called as poor person. Category number one is called as poor person. Category number two is called as middle class person. Category number two is called as middle class person, and category number three is called as rich person. Category number three is called as rich person. Rahul, why do you clarify it like this? It's because if you are a poor person, income tax gives you something called as rebate. Income tax gives you something called as rebate. If you are a middle class person, they say, boss, whatever tax is there, normal tax. Whatever tax is there, there is normal tax. But if you are found out to be a rich person, you are levied something called as surcharge. You are levied something called as surcharge. Yes. So generally when I talk, I come and say, I ask you, who are you? I ask you, who are you? Are you a poor person? Are you a middle class person? Or are you a rich person? If I find that you are a poor person, I'll give you extra item called as rebate. If you are a middle class person, I'll give you nothing. If you are a rich person, I will give you extra surcharge. I'll give you extra surcharge. This is how I talk. This is how I talk. Please don't use it in exam. Please don't use it in exam. This is our internal conversation. Okay. From exam perspective, it is rebate and surcharge. From our internal conversation perspective, it is poor, middle class or rich. Poor, middle class or rich. Clear? Clear? Yes. We are starting with this next chapter called as rates of taxes. Starting this next chapter called as rates of taxes. I told you in rates of taxes there are multiple people. There are multiple people. First person is individual. First person is individual. Yes. As a step process, what I do is I always come and tell you what happens for a middle class, because from that I can change others. So what happens is, if you are a middle class person, who are you? You are a middle class person. If you are a middle class person, income tax comes and says that your normal tax rates are 0 to 2.5 lakhs. 0 to 2.5 lakhs. Tax rate is no tax. Tax rate is no tax. If your income is from 2.5 lakhs to 5 lakhs, your tax rate is 5%. Your tax rate is 5%. If your income is between 5 lakhs to 10 lakhs, your tax rate is 20%. And if your income is anything more than 10 lakhs, your tax rate is 30%. Very good. Very good. This is what is your middle class concept. This is what is your middle class concept, where if you have an income between 0 to 2.5 lakhs, it is 0. If it is 2.5 to 5 lakhs, it is 5. 5 to 10 lakhs, it is 20. Anything above 10 is 30. Anything above 10 is 30 if you are a middle class person. If you are a middle class person. But here they have given some exemptions. They have given some exceptions. Exceptions come and say that, Rahul, if you are a resident individual, who are you? Who has a resident individual who has completed 60 years of age, but is less than 80 years of age, at any time in the previous year. Then in that case they came and said, Rahul, your tax rates are 0 to 3 lakhs, 0. 3 lakhs to 5 lakhs, same 5%. 5 lakhs to 10 lakhs, 20%. Anything above 10 lakhs, 30%. Anything above 10 lakhs, 30%. Yes. Now, things to note in mind. Things to note in mind. First, they are coming and saying you should be who? You should be whom? You should be a resident individual. A very important and a mandatory condition is that you should be a resident individual. Rahul, I am a non-resident of the age 79. I am a non-resident with an age 79. My slab rate is 0 to 2.5. My slab rate will become 0 to 2.5. My slab rate is not 0 to 3. My slab rate is not 0 to 3. Be extremely careful about this. If you are a resident individual, your slab rate will be 3. But if you are a non-resident, I don't care about your age. I don't care about your age. You will go back to 2.5. You will go back to 2.5. In my book, I might have put it as yellow. In my book, I would have put it as yellow. And I told you, in my book, yellow means what? Yellow means important cases where you may miss out. Important cases where you may miss out. So the important highlighter which you have. Using the important highlighter, please ensure that you mark this off. Please ensure that you mark this off. Mark of the resident individual part. Mark of the resident individual part. Mark of the resident individual part. Yes, to be extremely careful about the fact that resident individual Puerto Rico, only you are eligible for a higher rate. If you are not a resident individual, you will not be eligible for a higher basic exemption limit. You have to go back to 2.5. You have to go back to 2.5. Clearer? Clearer? Going forward. Rahul, I am a middle class person, normal category. Or I am a resident individual who has completed 60 years of age but is less than 80 years of age in the previous year. I am called as what, Rahul? I am called as senior citizen. I am called as a senior citizen. Now notice it says resident individual who has completed 60 years of age but is less than 80 years of age. Next category will be what? It will be resident individual who has completed, very good, 80 years of age at any time in the previous year. At any time in the previous year. Rahul, who is this person? This person is called as super senior citizen. This person is called as super senior citizen. In this case, income tax comes and says the rate will now become 0 to 5 lakhs at the rate of 0. Since I am putting dash, let me be consistent. I am putting it as dash. After 0 to 5 lakhs, it will become, very good, you will directly jump 5 lakhs to 10 lakhs. Rate will become 5%. Anything above 10 lakhs, rate will become 20, no, oh sorry, 5 to 10 lakhs will become 20%. Anything above 10 lakhs, it will directly become 30%. Anything above 10 lakhs, it will become 30%. This is what is your individual tax rates. This is what is your individual tax rates as per middle class concept. As per middle class concept. Yes or no? Yes or no? Let me here itself make it easier for you. This rates is not just for individual. This rates is for HUF, AOP, BOI and AJP also. It's for your individuals, HUF, AOP, BOI and AJP also. But be careful, the extra rates which I am giving, the 3 lakh and 5 lakh is only for individuals. Is only for individuals. Rahul, HUF has a Karta aged 60 and plus. HUF has a Karta aged 60 and plus. Can the HUF become a senior citizen? No. Only the Karta will become a senior citizen. HUF will still remain as a 2.5 lakhs case. HUF will also only remain as a 2.5 lakhs case, which means on the next two criteria which you're saying 0 to 3 lakhs and 0 to 5 lakhs is only for a resident individual. Everyone else will fall into 0 to 2.5. Everyone else will fall into 0 to 2.5. Clear? Not clear? 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 Now, questions to you. I'll ask you some questions. You tell me what slab will apply. I'll ask you some questions. You tell me what slab will apply. Scenario number A. I am a resident individual. I am a resident individual. My age is, my birth date is, my birth date is 31st March 19 40. What is your previous year ending, ma? What is your previous year ending? 23, 24. So 1944. My birth date is 31st March 1944. What is my basic exemption limit? First tell me what is your age. First tell me what is your age. See, understand, I will look at the age on what date? I will look at the age on 31st March 2024. I will look at your age on 31st March 2024. On 31st March 2024, what is your age? Your age is 84. 80 then. Your age is exactly 80. Your age is exactly 80, which means you will become super senior citizen. You will become a super senior citizen. You can ask me, Rahul, I was actually 79 years, 365 days and 1 day extra. Okay, I am 80 years only on the last day. I'm 80 years only on the last day. Can I still be called as a super senior citizen? Yes, I can still be called as a super senior citizen because it uses the word at any time in the previous year. So they're coming and saying I should be 80 at any time in the previous year. Rahul, I was 80 for only 1 day in that previous year. It's okay. You are still super senior citizen. You are still super senior citizen. Clear, not clear? Yes. So scenario number 1, if my birth date is on 31st March 1944, my age will become 80. I will become a super senior citizen. I'll become a super senior citizen. Yes or no? Yes or no? Rahul, my birth date is 1st April 1944. My birth date is 1st April 1944. Bye. Ritanya, what do you think? Yes. He is still
Be less than it.
super senior citizen. He is still super senior citizen. Rahul, what happened? What happened? Notice, what is my birth date? 1st April. Yes or no? Which means on 31st March. On 31st March 24. What is my age? My age is 79 years. 364 days. Yes or no? 23 hours. 59 minutes. 100. 59 seconds. 59 seconds. 99 milliseconds. Yes or no? Yes or no? Because on 1st April you become 80. On 1st April, actually it's not 99, it's actually 100. It's actually 100. Yes or no? Yes. If your birthday is going to come on 1st April, if your birthday is going to come on 1st April, at exactly 12 o'clock, your friends will call you and come and say you're 80. You are 80. Why are your friends coming and calling you that you're 80? Because you're already 100 milliseconds over. If you're 100 milliseconds over, technically this day becomes 24. This day becomes 1 day. Correct or not? If that day becomes 1 day, 79 years, 364 days plus that 1 day will become 80 years. It will become 80 years, which means technically you are already 80. Technically meaning you are already 80. Please understand the English. English says who has completed 80 years. Who has completed 80 years. I have completed my 80 years. On 1st April, 12 o'clock, 1 millisecond, I am done with 80. I am done with 80, which means I am already done with my 80 years. I am already done with my 80 years. Understand, on 31st March, you are 80 years and 1 day. On 31st March, you are 80 years and 1 day. On 1st April, you are 80 years. You are 80 years, which means you are eligible for a super citizenship. You are eligible for a super citizenship. This is a notification. What is this? This is a notification where CBDT has come and clarified that if, once again, is it a notification or a circular, man? It's a circular, right? Yes, it's a circular. The circular comes and says any resident individual whose 60th or 80th birthday, any individual citizen whose 60th or 80th birthday is falling on 1st April 2024, is falling on 1st April 2024, shall be treated as having completed the age of 60 or 80 on 31st March 24 itself. On 31st March 24 itself, which means he will be eligible for the higher basic exemption limit. What is the circular number? It is circular number 28 2016, dated 27 July 2016. Rahul, do I have to remember the circular number? Do I have to remember the circular number? No, I don't have to remember anything. One circular is there, that is enough for you. One circular is there, that is enough for you. This circular comes and clarifies that, sir, if you have what? If you have born on 1st April, you are assumed as completed the age in the last day itself. You are assumed as completed the age on the last day itself, which means if your birthday falls on 1st April 1964 or 1st April 1944, you are eligible for higher basic exemption limit. You are eligible for higher basic exemption limit. Now, think about it and tell me, this is a circular. What is it? What is it? It is a circular. Circulars are binding on. Circulars are binding on department. Circulars are binding on department. Apona, can Rahul come and say, I don't want to use a circular? Can Rahul come and say, I don't want to use a circular? Can Rahul come and say, this circular is not applicable to me? This circular is applicable on Rahul. Why? Because this is a beneficial circular. With this circular, my tax rate will come down or my tax rate increase? If my tax rate is going to come down, is it beneficial for me or non-beneficial for me? If it is beneficial for me, will I follow or not follow? I will follow. So is it applicable on assessees? Yes, because it is a beneficial circular. It is a beneficial circular. Yes or no? Yes, be extremely careful about this. Be extremely careful about this. While it is a circular, I will still take the benefit of the circular because it is beneficial. Because it is beneficial. Purida, Purilia. Clear? Clear? Yes. Great. Coming back to our notes. This is what happens if you are a middle class person. What happens if you are a middle class person? Your basic exemption limit is 2.5 lakhs. But if you are a resident individual with 60 years, it will become 3 lakhs. If you are a resident individual with age 80, it will become 5 lakhs. It will become 5 lakhs. This is for an individual only if you are a middle class person. Only if you are a middle class person. Rahul, I am not a middle class person. I am not a middle class person. I am a poor person. Who am I? I am a poor person. If you are a poor person, income tax comes and says you can claim something called as rebate under section 87A. You can claim something called as rebate under section 87A. Now, this rebate is only applicable for resident individuals again. Who is it applicable for? Resident individual, which means it is not applicable on non-residents. It is not applicable on HUF. It is not applicable on AOP, BOI, AJP, local authority, no one. Only one person. Who? Resident individual. Mark this also and keep important. Mark this also and keep important. Who is it? It is applicable on resident individual having total income. What income? Total income. Please understand, it is total income. Having total income less than or equal to rupees 5 lakhs. You are a resident individual having total income less than or equal to rupees 5 lakhs, which means if I want to call you poor, you have to be a resident individual with a total income less than or equal to 5 lakhs. Rahul, my income is 5 lakh 1 rupee. My income is 5 lakh 1 rupee. Am I poor? Am I poor? Yes. Why, Rahul, am I poor? Total income should be rounded off to the nearest 10. If I'm rounding off to the nearest 10, 5 lakh 1 will become 5 lakhs. So I'm still poor. Rahul, my income is 5 lakh 10. My income is 5 lakh 10. Am I poor now? No, I'm not poor anymore. I have to be 5 lakhs. I have to be 5 lakhs. Clear? Yes. What they're coming and saying is, Rahul, if you are a resident individual who's having a total income up to 5 lakhs, you can come to me and you can claim a rebate of rupees 12,500. You can claim a rebate of rupees 12,500 or actual tax payable, whichever is lower. Or actual tax payable, whichever is lower. Rahul, what is this 12,500? Where is this number coming from? If you notice on the top, in the slab rate model, 0 to 2.5 will give you 0. 2.5 to 5 will give you 5%, which means on this tax is 12,500. Yes or no? So they're coming and saying, Rahul, if you have an income up to 5 lakhs, your tax will be 12,500. Your tax will be 12,500. I will assume that 12,500 is a rebate for you. So they came and said, if you are a resident individual with an age, with the total income less than 5 lakh rupees, you can claim a rebate of 12,500 or actual tax, whichever is lower. Yes, Rahul, how can it be lower? Assume your income is 4 lakhs. Tax will be, for the first 2.5, 0. For the balance 1.5 will be at the rate of 5%, meaning, hello ma, 1.5, no, sorry, 7,500. You can claim a rebate of 7,500 or 12,500, whichever is lower, which means 7,500. Tax will become 7,500. Rebate will become 7,500. Total tax will become 0. Rahul, can it be more than 12,500? Yes. How, Rahul? Let's assume you have lottery income. Lottery income ka tax rate is 30%. Yes or no? So 4 lakhs into 30% will become 1,20,000. How much will it become? 1,20,000. You can only claim rebate of 12,500. When we do special tax rates, you will understand. Right now, the rebate is 12,500 or actual tax, whichever is lower. Yes or no? Yes. This is what the concept is. Any doubts till now? No. In this, they are coming and putting a caveat. They are coming and putting an exception. The exception comes and says, that rebate is not applicable on 112A LTCG. Rebate is not applicable on 112A LTCG, which is taxable at the rate of 10%. They are coming and saying, Rahul, even if you are poor, you still have to pay me tax on LTCG. Apnina enna artho, Rahul? Let's do an example. I am coming and saying that, Rahul, assume I am a person. My salary income is given as 3,50,000. How much is it? 3,50,000. I also have an LTCG under section 112A. Assuming 1,30,000. How much? 1,30,000. What is my total income, ma? 4,80,000. Now, if you don't remember it from your inter syllabus, let me clarify to you. LTCG under section 112A is taxable at the rate of 10% in excess of 1 lakh. At what rate? 10% in excess of 1 lakh, which means 1,30,000 length, 1 lakh will be not taxable. Balance 30,000 will be taxable at 30%. Will be taxable at 30%. So if I have to do this computation, what I have to do is I have to come and say, what is my tax on salaries first? What is my tax on salary? What is my salary income? What is my salary income? 3,50,000. In that 3,50,000, 0 to 2.5, it will become 0. Balance is how much? Balance is 1 lakh at the rate of 5%. Number is 5,000. Yes or no? Yes. So my total tax will become 5,000 on salaries. My total tax will become 5,000 on salaries. Then I will do tax on LTCG under section 112A. Under section 112A. What is the number? It is 1,30,000. What will I do? I will say 1,30,000 minus 1 lakh at the rate of 10%. Number is 3,000. Number is 3,000. So therefore my total tax will become 8,000. My total tax will become 8,000. Now tell me, am I a poor person or not a poor person? I am a poor person because my income is 4,80,000. My income is 4,80,000, which means I am eligible for rebate. I am eligible for rebate. Rebate is what, ma? Rebate is 12,500 or actual tax payable. Now, actual tax payable, they are coming and saying you cannot consider 112A. You cannot consider 112A, which means my actual tax payable will only be 5,000. My actual tax payable will only be 5,000, which means whichever is lower, which will become only 5,000, which will become only 5,000, which means my tax payable will become 3,000. My tax payable will become 3,000. On this 3,000, I will levy health and education cess at the rate of 4%. Number is 120. Therefore, my tax payable will become 3,120. My tax payable will become 3,120. In simple words, whenever you are having 112A, you have to mandatory pay the tax of 112A. You have to mandatory pay the tax of 112A. If you notice, what is the difference? Difference is 3,000, which is nothing but my 112A. It's nothing but my 112A, which means bare minimum 112A has to be paid. Bare minimum 112A has to be paid. This can become a checkpoint. Exam la pomodu, if you have a 112A case coming in and you find yourself poor, you have to ensure that the tax payable is at least the 112A tax. The tax payable is at least 112A tax. Clear, not clear? Yes, this is the concept of rebate. This is the concept of rebate, which is coming and saying that you are who? You are a resident individual with the total income less than or equal to 5 lakhs. You can claim a rebate of 12,500 or actual tax, whichever is lower. Clear till here? Can we go forward? Yes. If you are not poor, Rahul, what are you? You are not poor. You are then rich. Yes, Rahul, I am neither middle class, I am neither poor, I am now rich. They are saying, Rahul, if you are rich, you now have to pay something called as surcharge. Now, if I told you have to pay surcharge has to be paid on the tax. So, which means what I will do? I will first compute tax as I am middle class. I am computing tax as if I am middle class. On this, I will levy surcharge. They are saying, Rahul, tell me what your total income is. I want to see how rich are you. They are saying, Rahul, if you are up to 50 lakhs, I'll say, no, you are not rich. You are middle class. Which means surcharge rate will be 0. I'm saying, no, Rahul, I am actually more than 50 lakhs. But I am having less than 1 crore. What is more than 50 lakhs but less than 1 crore, ma? My income. My total income is more than 50 lakhs but less than 1 crore. My surcharge rate will become 10% of basic tax. My surcharge rate will become 10% of basic tax. Rahul, I am having more than 1 crore. I am having more than 1 crore, but it is less than 2 crores. But it is less than 2 crores. Surcharge rate will become 15% of basic tax. 15% of basic tax. Then they are saying, Rahul, my income is more than 2 crores, but less than or equal to 5 crores. In that case, my surcharge will become 25% of basic tax. 25% of basic tax. And if I am found out to be a person having more than 5 crores, I will be now levying 37% of basic tax. 37% of basic tax. Where is this 37% coming from? You remember we did MMR. In MMR, I came and said it is 30 plus 37. This is what it is. This is what it is. 30 plus 37% of basic tax. 30 plus 37% of basic tax. In income tax terms, we call these two taxes as enhanced surcharge. What do we call them as? Enhanced surcharge. Yes, this is your surcharge concept. This is your surcharge concept. We will do one example and then we'll close for the day. We'll do one example and close for the day. Yes. Example. I am Mr. A. Who am I? I am Mr. A. My age is 63 years. My age is 63 years. I am a resident individual. I am a resident individual. My total income is given as 2 crores 36 lakhs. How much is it? 2 crores 36 lakhs. I am asking you to compute tax. I am asking you to compute tax. How will you compute the tax? First, you will take my income and I will put my tax. I'll put my tax. Income 02 3 lakhs. 0 3 lakhs to 5 lakhs. Difference is 2 lakhs at the rate of 5%. Number will become 10,000. Then 5 lakhs to 10 lakhs at the rate of 20%. Number is 1 lakh. Balance is 2 crores 26 lakhs. Yes, no. 2 crore 36 minus 10 lakhs will become 2 crore 26 lakhs at the rate of 30%. Number 6 lakh. 6 lakh 60 varuma. 67 lakh 80,000 something irukum. 67 lakh 80,000. 67 lakh 80,000 total, and give me the basic tax. $68 lakh 90,000. This is what my basic tax is. Now tell me, am I rich, middle class or poor? Am I rich, middle class or poor? I am rich. I have 2 crore 30. My income is 2 crore 30. Therefore, I am rich. If I am rich, I have to include surcharge at the rate of, question to you, surcharge, will you directly take 25%, or will you come and say for the first 50 lakhs 0, then for the balance 0, then for the balance 10, then 15 or 25? Will you directly put 25 or will you put everything? You will directly put 25. You will directly put 25. Please understand, surcharge is a flat figure. Surcharge is a flat figure. Surcharge is not a slab figure. Okay. Tax is a slab figure. Surcharge is a flat figure. Surcharge is a flat figure. So I will directly do 25% number. Sorry. 17 lakh. 22,500 total. 86 lakh 12,500. Is your question over? Is your question over? Is your question over? No, you have to include health and education cess at the rate of 4% number 3,44,000 500. 3,44,500 total will become 89,57,000. Rahul, what are the checkpoints which you have to do? First checkpoint, total income should be rounded off to the nearest 10. Tax payable should be rounded off to the nearest 10. Both are correct? Yes, so no problem. So no problem. This is how you compute your surcharge. This is how you compute your surcharge. Yes or no? Yes or no? Yes. Simple, straightforward surcharges. Any doubts? Any doubts? No doubts? All clear? Ritanya, all clear? Am I being fast? You are understanding everything?
Yes.
Okay, perfect. Yes, this is what your surcharge concept is. What is the surcharge concept? Up to 50 lakhs it is 0, 50 lakhs to 1 crore it is 10%, 1 crore to 2 crore it is 15%, 2 crores to 5 crores it is 25, above 5 crores it is 37. Above 5 crores it is 37. Clear, not clear? Yes, we will do one more small question. We'll do one more small question. I am coming and saying, this is example number 3. Okay, I am Mr. X. I'm Mr. X. Hey, this question you people are doing. Okay, I am Mr. X. Age is 24. Age is 24 years. Age is 24 years. This person is a resident person with an total income. With an total income of 51 lakhs. How much is his total income? 51 lakhs. Yes, help me compute tax. Help me compute tax quickly. Help me compute tax. How will you do it? Hey, can I do a shortcut method? Can I do shortcut method? See, since an income is 51 lakhs, I know up to 10 lakhs the number will not change. Up to 10 lakhs the number will not change. So can I come and say up to 10 lakhs the number is 1,12,500? Yes. How, Rahul? For the first 2.5 it is 0, 2.5 to 5 it is 12,500, 5 to 10 it is 1 lakh. So can I directly put up to 10 lakhs 1,12,500? Yes. In exam can I do that, Rahul? Yes, you can do that. But ensure that the income should be more than 10 lakhs. The income is more than 10 lakhs only, this will work. You cannot just like that come and do the other way around. Okay. So you have to do up to 10 lakhs it is 1,12,500. Balance is 41 lakhs at the rate of 12 lakh 30,000 total. 13,42,500. Ask yourself a question. Am I rich, middle class or poor? I am a rich person, which means add at the rate of 10% number 134250 total. One lakh, 14 lakh, 76, 750. 14, 76, 750. Now hold. Don't do further. I have an issue here. Something seems wrong. I don't know why it seems wrong. Okay, for some reason it looks wrong to me. I don't know what it is. Somehow I feel like let's try to compute tax on 50 lakhs. Let's also try to compute tax on 50 lakhs. Okay, just to check. What will we do? Up to it is 1,12,500. 1,12,500. Then balance 40 lakhs will be at the rate of 30%. Number is 12 lakhs. Therefore, it will become 13 lakh 12,500. Am I rich, poor, middle class? I am middle class. Exactly 50 lakhs, no surcharge. Exact 50 lakhs, no surcharge. Therefore, surcharge is 0. Therefore, taxes 13 lakh 12,500. 13 lakh 12,500. Yes or no? Yes or no? No. Look at the both numbers. Look at the both numbers. Tell me what is the difference?
1 lakh.
The difference of if I tell you the difference is 1,64,250. Yeah? My difference is 1,64,250. Notice and tell me, does something seem wrong to you?
The income itself is only 1 lakh difference there, but the tax.
Notice, no? What is happening? What is my difference in income? 1 lakh. What is the extra tax I'm paying for this difference of income? 1,64,250. Think, no? You are a normal person. You are earning 1 lakh. Income tax is saying you have to pay tax of 30%. Okay? 1 lakh already they're taking 30%. Ana, in this scenario, what they're saying, 1 lakh is my income, my tax payable is 1,64,250. Hey, do you think you want to earn this 1 lakh rupees? Do you think you want to earn this 1 lakh rupees? Why? Had I not earned this 1 lakh rupees, I would have not paid 1,64,250. Yes or no? Yes or no? So what will you do? You will go to the government and you will come and say, dear sir, for me to have an income of 1 lakh, you are asking me 1,64,250. 1,64,250. I don't want this 1 lakh itself. I don't want this 1 lakh itself. If you tell the government that you don't want 1 lakh, government will say, give me that 1 lakh. Give me that 1 lakh. You said, sir, why should I give you the 1 lakh? Adana, I don't want. Government says, Rahul, if you give me that 1 lakh, I will not ask you the extra money. I will not ask you the extra money. So how much is government asking from me? 1 lakh. How much will government not ask from me? 64,250. 1,64,250. So which means if I give government 1 lakh, government will not ask from me 1,64,250. Which means me giving me 1 lakh will save me how much extra money? Will save me 64,250. Yes or no? Yes or no? If I end up giving this 1 lakh to the government, government will not ask me to pay extra 64,250. This extra 64,250 in income tax terms is called as marginal relief. What is it called as? Marginal relief, which is nothing but 64,250. Nothing but 64,250. Get me the number. It will become 14,12,500. Rahul, how did you know this without even using the calculator? Very simple. I told I will surrender my 1 lakh. I will surrender my 1 lakh and you will not ask me for 64,250. Hey, if I surrender my 1 lakh, my income will become 50 lakhs. My tax on that income will become 13,12,500. Now, if my tax is 13,12,500, government is asking me to surrender 1 lakh. So I will surrender 1 lakh. That will become 14,12,500. 14,12,500, which means I can do it two ways. I can do it two ways. Way number one, I can come and put on the left side marginal relief. Scenario number two, I can come to the right side and I can put add amount surrendered. How much am I surrendering, ma? 1 lakh. Extra will become 14,12,500. Extra will become 14,12,500. Yes, this is a concept of marginal relief. This is a concept of marginal relief. What is this marginal relief, Rahul? Income tax is coming and saying, because of me levying a surcharge, if you end up in a scenario where your income is going more than your tax is going more than your income, in that case, you surrender your income to me. I will not ask you for extra tax. Please understand, this will only happen in case of surcharges. It will only happen in case of surcharges, and generally will only happen if you are very close. If you notice, 50 lakhs and the 51 lakhs, extra is only 1 lakh. That scenario this will happen. Assuming you do this for 55 lakhs, it will not happen. You do it for 55 lakhs it will not happen, because 55 lakhs oda scenario la extra income will be 5 lakhs and tax will be less than 5 lakhs. And the scenario la margin relief will not come. Margin relief will not come. So which means margin relief as a concept will only come in two cases. Case number one, your income should be very close. Your income should be very close. Case number two, you should have surcharge on that income. You should have a surcharge on that income. Notice 51 has a surcharge, 50 does not have a surcharge. Surcharge is applicable, income is very close. Adanale margin relief came. Yes, this can work the other way around also. Let's assume my income was 1 crore 1 lakh. How much? 1 crore 1 lakh. My other check I will do 1 crore. Now 1 crore 1 lakh is also surcharge. 1 crore is also surcharge. But the point is 1 crore 1 lakh surcharge is 15. 1 crore surcharge is 10. Surcharge increase, not increase? Increase. And the increase nala you will find a difference. And the increase nala you will find a difference. In tomorrow's class we will also do that check. In tomorrow's class we will also do that check. Homework for you. Homework for you. I want you to check if margin relief is applicable for 58 lakhs. I want you to check and come back next class whether margin relief is applicable on 58 lakhs. Okay, just check and come. It's a hardly 10 minutes. You'll hardly take 3 minutes. Just take 3 minutes. Check and tell me whether 58 lakhs will come. How do you do that? Simple. You have to do tax on 58 lakhs. You have to do tax on 50 lakhs. Check your difference in income. Check your difference in tax, and you will get the answer. Check and tell me tomorrow whether margin relief will come on 58 lakhs or not. Yes or no? Yes or no? Yes, I want the working. I want the working. Ritania, you also. Okay. Yes. Tomorrow's class we will again elaborate this a little further. I will give you the notes around margin relief and we'll go forward. Okay, I am not spending so much time on individual taxation like I told you, because it is inter-syllabus. It is inter-syllabus. I don't have to elaborate much further. So we will do some sums. We will do some sums, but not very much. Not very much. Certain sums we will do to the extent of understanding. I am rushing a little bit on the individual part because I understand it is inter-level syllabus. But yes, if you don't know, do let me know. I will elaborate it further. Okay, at this point of time I am assuming you know the syllabus, therefore I am going forward. In case you don't know, let me know. I will stop and I will give you some examples. Okay, we will definitely spend some extra amount of time in companies and all those things because those are important for you. Okay, so that time we will sit and we will elaborate a little further. On an individual level I am not doing it so much. Okay, yes, today's homework, you have to do this 58 lakhs, complete chapter number 1 revision fully, complete chapter number 1 reading fully, chapter number 2 individual level reading. Okay, individual order, middle class, poor and rich. And the reading matto you have to do rates of taxes first page alone. That's all. Rates of taxes first page alone, first chapter fully. Read that chapter and come for tomorrow's class and then we'll discuss further. Okay. Yes. All right. Thank you people. Have a good day.